What's going on, everyone? My name is Nico Andrasakes. I am a loan officer here at Luminate Bank. I am joined today with two experts in the real estate industry. On the left here is Mark.
Hi, everyone. I'm Mark Casamassina with Luminate Bank, and my partner here.
Arthur Tishka with Keller Williams Realty here in Wayne, New Jersey. Been a realtor for the past 10 years. And I work with these two fine gentlemen over here, and we're here to talk about the proposed 50-year term mortgage.
Exactly right. So we are going to discuss with Mark and Arthur what is arguably the hottest theory, we'll call it, in real estate today, the 50-year mortgage. So the first question, I'm going to throw it to you, Arthur. From a realtor's perspective, do you see a 50-year mortgage as a viable tool to help solve some of the problems that buyers are facing today?
Yeah, so I'm going to speak specifically to the Northern Jersey market, because all I hear from young people is unaffordability. People can't get into homes who can't qualify, right? So we're looking at the 50-year term, the proposed 50-year term, as a vehicle to basically get people qualified to get into these homes and qualify basically to just get into home ownership, right? I think at the end of the day, if you can unlock the potentials of home ownership, however way that seems suitable for you, it's just going to get you that much further down the line in achieving that American dream, right? So when you're looking at the 50-year term compared to the 30-year term, we have a slight difference in payment, right? So from the 30-year term, we have a one payment, 50-year term, another payment. So when you have the 50-year term, you're going to be able to qualify for just that much more. And I think Mark can talk about a little bit about the qualifications with that.
Yeah, so basically, yeah. So on a $400,000 loan, the difference in the payment, you have to assume the 30-year mortgage rate may be slightly lower than the 50-year mortgage rate. But you have to, the difference in the payment may be $200 more a month for a 30-year mortgage than it would be for a 50-year mortgage. And that equates to in buying power to somebody, maybe $20,000, $30,000 more dollars in buying power, which can help that person maybe afford that home that may be a little bit outside their reach. Or if they chose to go in the other direction and say, hey, I qualify at a 30-year mortgage, but I want to fall back on the 50-year mortgage payment, they save themselves $200, $300 a month in their payment, which allows them to maybe afford different things in life, and they can grow into their mortgage payment.
Right, and just piggybacking off of that, who would that particularly help? Specifically, the type of payment options that they would have. Like we have like our salaried individuals, and you said we were talking earlier about seasonal workers.
Yep.
I think that's something that is really important for people to hear, is that the 50-year term could really help certain groups of people qualify for housing.
Yeah, exactly. I see it helping potentially a senior that's on a fixed income.
Right.
Number one, because are they really worried about paying off their mortgage, right? They're looking for housing. They want their payment to be as cheap as possible because they're on a fixed income. It could help that seasonal employee, somebody that may be in an industry where they earn their money from April to November, and then in January, February, March, their income is less, so they can fall back on a slightly lower payment. It can help somebody that gets paid a commission check once a year. It can help somebody that gets a bonus check once a year. So they're on a lower base salary, and they can make up the difference in the payment and then prepay the mortgage in once a year, prepay the mortgage and say, all right, to be done in 30 years, I have to send in $3,000 extra a year, so I'll do that once a year, and I'm still accomplishing trying to be done in 30 years.
Right.
So the overarching point that I'm hearing from both of you guys is that a 50-year mortgage could essentially just allow improve access for buyers to get into a home, and maybe the theory is that it's a temporary solution to then refinance, sell, do something different down the line.
Can I?
Yeah, go ahead.
So Fannie Mae, according to Fannie Mae, the average lifespan of a 30-year mortgage is 7 to 10 years. So that falls right into what you said, right? That person that takes a 50-year mortgage, within the first 7 to 10 years, they could refinance, they could sell, they could do a lot of things, right?
So they'll have access to things that they wouldn't have access to as a renter, right?
Yes.
Because if you're renting, you're not building equity. Your home isn't appreciating. Your payment is not locked either, right? If you're renting and the landlord decides to raise your rent,
the landlord decides to put the house on the market and sell it.
Put the house on the market and they sell it, you're out of luck. The 50-year term, if you weren't able to qualify for the 15 or the 30, a 50-year term unlocks the ability to own a home in today's market. You get to lock in your living expenses, which is the biggest thing.
Correct.
That I think you were going off of.
Yes, absolutely. I agree.
So now let's talk about some of the cons to the 50-year mortgage. I'll throw whoever wants to respond What would you guys say to the person who makes the argument that a 50-year mortgage makes it incredibly difficult to build wealth? The individual who wants to purchase a home is doing it to build generational wealth. You don't want to pay interest over time. These 50-year mortgages, it's taking them longer to build wealth, and they're paying much more in interest over the lifespan of the loan. What are some of the comments that you guys have with regards to that?
Yeah, I mean, I'll just touch on a couple of things and you can elaborate. So a couple of different things, right? Average loan, 7 to 10 years, right? Like people are usually holding on to their mortgages for about 7 to 10 years, we were checking, right? Mm-hmm. So when we say 50-year term, you're not necessarily borrowing and paying that interest for 50 years, right? You have a bunch of different options, right? Chances are that home that you're purchasing, you're not going to live in it for 50 years, right? There's a very slim chance that you're going to do that statistically. You'll have an option to refinance that loan, change it to a 30 or 15-year term, or I'm sure there's a bunch of different loan products out there. You will have the ability to invest the difference as opposed from a 30-year term to a 50-year term. So that couple $100 that you're going to save on your monthly payment, you invest it. And at the same time, if you didn't want to do that, you can always pay the mortgage off twice a month instead of once a month. That way you can tackle that 50-year term into a much shorter life expectancy for the loan. So it's flexible, right? It's not like you're stuck 50 years paying 50-year interest terms.
So it's an interesting point that Arthur brings up, Mark. I'd like you to touch on a little bit more is the client's ability to prepay in any respect, whether it's entirely or monthly.
They can prepay as often as they want, and like you said earlier, like they're paying extra interest. Their payments over 50 years. I agree, right? They are, but it's a discipline. And like Arthur said, they could take that difference in money and they can take it and say, all right, I want to fall back on a 50-year payment, but I'm going to prepay it like it's 30-year, but I have the flexibility to fall back. They could have a child going through college, and it's a great vehicle to free up money again and have cash flow in their life. Everything they do, it's a discipline, right? Managing their money. They could say, you know what, I'm going to take a 50-year mortgage, but I'm going to do pre-tax contributions to my 401k and put more money into my retirement account. So for every pro, of course, there's a con. But my mindset is it's a discipline when somebody goes about doing this, and they have to be disciplined to prepay their mortgage just like anything else they do in life.
Absolutely. Another concern that people would have is, hey, if I'm taking on this 50-year mortgage and it's taking me such a long time to pay down my debt, not chunking away at the principal balance, what risk am I running for being underwater? The value of my home going below the value of my mortgage, what risks do I face with that?
So let's talk about that, right? The risk of falling underwater, right? Like, what happened during the 2008 Great Recession, right? A lot of people went underwater. Here's the thing. We're in a much different climate, real estate-wise, here in the Northern Jersey market. Tight inventory, appreciation's up. Let's say you lock yourself into a 50-year term, right? And the question was that you have the risk of fearing going underwater, losing money, right? You won't lose money if you don't sell the property, right? I think it goes back to like stocks, right? Like you don't lose until you sell. It's the same thing with real estate. Because you have a lower monthly payment, and the rental market is very strong in Northern Jersey, you will have the option to very likely cash flow, hold that property, get back on your feet, stick a tenant in it. Boom, you're a landlord now. You have an investment property.
Now you have time to let the market recover.
As a homeowner, you have so many different options. And we know the 50-year term isn't here yet. It's a proposed idea, but we should all welcome it, that it's going to be a vehicle to getting you into the dream of homeownership, and you're going to have options now. Right? Because you have the 15-year, you have the 30-year, you have ARMs, you have non-QMs, you have all these great loan products. The 50-year term is just going to be another option for individuals, especially for young people in this current climate in Northern Jersey where we need any kind of solutions helping affordability.
I agree.
Lastly, a question that has come up, because again, this is just talk as of right now, this is just theory as of right now, but a question mark for you would be, what are the regulatory hurdles and market issues, such as lack of a secondary market for these types of mortgages, or maybe the qualified mortgage rules that currently exist that could cause hurdles and issues for these types of programs?
So this one I'm going to read off my notes, okay? So the main hurdle is regulation. Under the Dodd-Frank Act, mortgages longer than 30 years are not considered qualified mortgages. Major institutions like Fannie Mae and Freddie Mac cannot buy or insure non-QM loans, so a non-qualified mortgage, which means lenders can't easily sell these loans to investors on the secondary market. For 50-year mortgages to become common, Congress would need to amend existing financial laws, which currently lacks appetite. So time will tell if this even becomes a viable option for somebody in the future.
Perfect. All right. So to kind of wrap things up here, I would like to get your parting thoughts on this crazy topic at hand today, the 50-year mortgage. So we'll start with you, Arthur, or Mark, whoever wants to start. What are your parting thoughts for our listeners?
Let me go first.
Absolutely.
I think it's great. I think giving a first-time home buyer or any buyer refinance or purchase an option. And I think options are wonderful, and it's always up to the individual if it works best for themselves and them and their families. It's not my choice. It's going to be their choice. But if I have more options to provide somebody to either have affordability in life, affordability purchasing a home, free up debt, I think it's a great option for people to consider. It's not going to be right for everybody, but I think it's a great option for people to consider.
Excellent. And Arthur?
Absolutely. And just to piggyback off that, the word option, I really love that. As a realtor, homeowner, investor, somebody that's preaching to literally everybody around me to buy a home, I'm going to be preaching it until I'm blue in the face, particularly just in our Northern Jersey markets. As a young person, the best thing you can do is to get into a home, and you're going to be building wealth. You're going to be building stability. You're going to have that locked-in price. You're buying into a lifestyle. The 50-year term, if it ever does get passed, like we're saying, will be such an amazing option for young people, old people, fixed income, seasonal workers, you name it, whoever's going to benefit from this, to be able to qualify and get into the home ownership. And above all that, from an investment standpoint, you're locking in lower monthly payments. And if you're able to stick a tenant in it, in that property, where you have the lower monthly payments, you can cash flow a little bit better, and you're building wealth through that avenue. There is just so many different options and choices that this opens up for young people all alike to get into that home that they've been dreaming about, that maybe the numbers were just a little bit too tight.
Yep.
And, now it works out with the flexibility of the 50-year term. Because as we said before, it doesn't have to be 50 years. Average life of the loan is about 7 to 10 years. And you could always refinance. You have so many different options to change that 50 into a 30 or 15 year. And I think we should absolutely be taking advantage of it in today's market.
Beautiful. Thank you, everyone, for listening in. We thank Mark Casmassina from Illuminate Bank and Arthur Tishko from Keller Williams. The people will be on the edge of their seats waiting to find out if this 50-year mortgage comes to fruition. So thank you all for joining.
Thank you.